DOGE futures leverage is rising while spot price action stays trapped in a narrow range. That mismatch is the risk, because crowded derivatives can snap in either direction once price finally leaves the range. DOGE Weakens Futures is the hook, because the confirmed event creates a specific pressure point. Open interest climbed from about 505 million to around 683 million contracts over 5 days, while DOGE traded between 0.094 and 0.101. The measurable anchor is 33% OI jump, and the story turns on leverage build rather than broad hype. Instead of treating the headline as a market mood swing, this segment follows the mechanism that makes the change matter and the next signal that can prove whether the story is moving forward. The confirmed baseline is this. A cryptoquant analyst revealed a short position targeting 1 million DOGE and a move towards 0.09069. That detail gives viewers the frame for the rest of the story. It shows what is already known, which actors or assets are involved, and why the event is not just a random market headline. For this story, Dogecoin and Doge sit inside a process where short squeeze can change the readout. The baseline also defines the boundary. 33% OI jump is usable evidence, while anything beyond short squeeze still needs follow-through. The important part is to keep the evidence tight before moving into what the change actually does. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is where DOGE Weakens Futures becomes useful. When futures contracts expand without matching spot demand, leverage can become the driver instead of real buying pressure. In plain English, the event matters because it changes the way access, risk, settlement, liquidity, governance, or infrastructure works. In this case, the stress point is range price, which is why 33% OI jump is a signal rather than decoration. That is why this segment spends time on range price before discussing impact. Without that mechanism, the event is easy to misread. The headline may grab attention, but the mechanism explains why traders, builders, users, or institutions have to care about the next step. The impact lands with a specific group, not with crypto as a whole. DOGE traders face liquidation risk on longs if momentum fails, while shorts can be squeezed if buyers return suddenly. That is the practical consequence. It may affect how users move funds, how institutions manage compliance, how traders price liquidity, how developers build, or how risk desks read the market. The affected side is tied to Doge and Dogecoin, so the scope stays limited to what the supplied facts support. That narrower read is more useful than a sweeping market claim. The open question is just as important as the confirmed fact. The 10% pullback is a warned scenario, not a confirmed outcome, and sentiment could reverse the setup quickly. That means the story should not be read as a guaranteed outcome. The proof standard is simple. The next signal is whether Doge breaks the range with spot volume or whether leverage resets through liquidations. Until that signal appears, the confirmed development and the unresolved part should stay separate. A stronger claim would need Dogecoin or relevant market participants to show follow-through around short squeeze, not only reaction around Doge. That prevents a useful news signal from turning into speculation. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal for DOGE Weakens Futures is concrete. The next signal is whether Doge breaks the range with spot volume or whether leverage resets through liquidations. If that signal appears, the story has new evidence. If it does not, the headline may remain smaller than the early reaction suggests. A clean follow-through would connect 33% OI jump to visible action, usage, compliance, liquidity, or technical progress. For viewers, the usable close is not a direction call. It is a checklist tied to 33% OI jump, leverage build, and the specific trigger above. The final readout is practical. Track the next verifiable step, not the loudest claim around the asset, rule, protocol, or market move.